Have you ever wondered why Bitcoin seems to follow broader market movements? In May, Bloomberg released a report saying that Bitcoin's correlation with tech stocks jumped to the highest level since August of last year. And I know there's been a bit of a decorrelation recently with S&P 500 hitting all-time highs, some FUD in the Bitcoin market, but is Bitcoin really following traditional stock movements more broadly, or something else going on here? So stick around until the end to find out. Now, take note that this report, of course, was released last May, and the analysis is using the 90-day or 3-month time frame. At a higher time frame, it's always been high correlation. However, on lower time frames, you do see a different story. In fact, the daily coefficient right now is in the negative territory at the time we recorded this video. But don't worry, I'll explain how that works in just a minute. For now, we have to remember that the crypto community always knew that Bitcoin, at least most of the time, follows the traditional markets. It follows risk-on, risk-off attitudes of the broad investment class. Thus, it's always compared with the S&P 500 and the NASDAQ. Now, for the longest time, the community has been waiting for Bitcoin's decoupling from the markets, or the time when Bitcoin just doesn't care what the stock markets are doing. Now, first, let us examine why all of this is important anyway, and we should be talking about it. It all boils down to the idea that Bitcoin is the digital version of gold. From time immemorial, gold has been the go-to store of value and hedge against inflation for investors. It has a reputation as being a safe haven during recessions. For example, in the 2007 market collapse, the demand for gold went up and it doubled in value between 2007 and 2011. Gold also did well when fear took over the markets during the COVID-19 pandemic. The correlation between Bitcoin and traditional assets, such as tech stocks, though, becomes even more crucial because it challenges the notion of Bitcoin as a hedge against market turmoil. It might actually be a proxy for tech stocks. Ideally, if Bitcoin were to act as a true hedge like gold, its price movements would be negatively correlated with those of stocks, meaning it would rise when stocks fall, providing a buffer during market downturns. Because of the close correlation, though, some people are questioning if Bitcoin is kind of just another tech stock. Don't say that about Bitcoin. Anyway, to understand further, let us define what is a correlation coefficient. The concept of the correlation coefficient was developed by Sir Francis Galton in the late 19th century, who is, by the way, the cousin of Charles Darwin. Kind of cool. Anyway, he introduced the idea of correlation in 1888 while studying the relationship between different variables. Building on Galton's work, British mathematician Carl Pearson formalized the mathematical formula for the correlation coefficient, which is now known as Pearson's correlation coefficient. Don't worry, we don't need a master's in mathematics to grasp the concept. In a nutshell, the correlation coefficient is a measure that shows how closely two variables are related. It ranges from -1 to 1, with -1 indicating a perfect negative correlation, 0 indicating no correlation, and 1 indicating a perfect positive correlation. So in short, if the number is closer to 1, it means the more Bitcoin is following another asset like tech stocks. If it is in the negative, then it's deviating. By the way, if you're interested in playing around with it, the indicator is available to use over on TradingView. Now, before we dive a bit deeper into this topic, and it's super interesting, so make sure to stick around, I wanted to let you know real quick about the Wealth Master newsletter. This is your weekly guide to the cryptocurrency markets. Our readers love it. I'm sure you will too. And here's why. Every week, my team of researchers and I are helping you to not just stay ahead of the curve, but also to save your time by finding you the latest and the greatest, the best insights on altcoins, meme coins, DeFi, airdrops, charts, and much, much more. You can join our 135,000 plus weekly readers for free. Link in the description or the pinned comment over on X. Now, back into it. So the Bloomberg report said that Bitcoin's 90-day correlation coefficient with the NASDAQ 100, the tech-heavy sector in U.S. stock markets, reached the highest level since August, something that does not sit well with investors who are trying to hedge. We also have to take note that the current daily and weekly correlation is in the negative territory. NASDAQ has been steadily going up while Bitcoin is going sideways and down sometimes and sometimes violently up. It's been crazy. It's driving us nuts anyway. However, if we zoom out on a higher time frame like the monthly chart, the correlation has been in the positive region for quite some time. Numbers have been ranging from 0.5 to 0.9, showing very high correlation on bigger time frames. The correlation is not 100%, but it's pretty damn close. They seem to be following a very similar path. Investors look at Bitcoin as kind of another tech stock. Now, to give us a clue, let's look at this table from Investopedia based on the table. So they are mostly affected by the same things here. They're both affected by market forces like supply and demand, risk on, risk off attitudes, liquidity, etc. If the market is greedy, then these assets will pump. If there is fear, then these assets will most likely experience dumps. Do you remember the market crash during the pandemic from February 12th to March 23rd, 2020? The Dow Jones lost 37% of its value, and the New York Stock Exchange trading was actually suspended several times. During the same period, Bitcoin also went on a pretty crazy fire sale and lost half of its value in just 2 days. Oh, those are crazy times. Bitcoin is trading at around $4,000 all the way down from $10,000. A classic example of how sentiments can affect both stocks and Bitcoin. Again, they're susceptible to the same forces. Economic conditions and monetary policies are also important. That is the reason why analysts and investors listen when Fed Chair Jerome Powell talks. If the inflation is high, then most probably the Fed will use all the tools under its disposal to try to hammer it down. That includes high interest rates, which could lessen the money supply in the market. High rates, of course, make it more expensive to borrow money, slowing businesses down and all that kind of stuff. That lessens the amount of capital that can be used in buying investment instruments as well, like stocks and crypto. People don't want to take a second mortgage on their house to buy crypto in that situation. If the Fed implements a rate cut, the opposite happens. Lower rates are generally considered bullish for the market. Now, another important factor, of course, is geopolitics. For example, in 2022, the stock market fell over the Russian invasion of Ukraine, rattling investors, of course. Bitcoin wasn't immune. It fell 8% after the Russian army started its conflict there. One of the biggest things that separates traditional stocks from Bitcoin, of course, though, is regulatory changes. Being a younger asset class, Bitcoin has always been under intense regulatory scrutiny. In 2021, the Chinese crypto crackdown sent the crypto market downhill and wiped out over $400 billion in a very short amount of time. Bitcoin's value actually decreased 8% in a single day, which is a lot for Bitcoin. Now, during the same period, the NASDAQ, it just kept going up. I know, it's painful sometimes. We've also seen how the approval of Bitcoin ETFs last January initiated a massive rally up to $74,000. And if we look at all this closely, it becomes apparent that there is a correlation between Bitcoin and stocks, especially on higher time frames. But it's not what most people think. Bitcoin's not really following the action of traditional stocks, but rather both are following something bigger. It's more accurate to say that Bitcoin, and to an extent the whole cryptocurrency market, are affected by the wider investor sentiment, economic conditions, geopolitics, monetary policies, regulation, all that kind of stuff. When we see deviations on the short term, the daily time frame is probably because of some specific event. For example, the FTX collapse, all the FUD surrounding the market, or the German Bitcoin sell-off. But the NASDAQ and the S&P 500, we're doing just fine in those situations. Now, to answer the question, if Bitcoin is a tech stock, obviously, no, it's not. It might behave kind of like it, and the correlation can be very high, especially on higher time frames, but it's a totally different asset class. It just gets affected by the same things that also affect stocks. But the bigger question is, how can it fulfill its promise of being a hedge against uncertainties and inflation? Well, let's put it this way. If you're an inexperienced investor looking at day trading Bitcoin, then the odds are going to forever be against you. But if you're holding Bitcoin for the long term and looking at holding it for at least 4 years, then you'll probably do just fine. If you look at the numbers, it is a better hedge against inflation when compared to gold, especially over a longer time frame. If you bought $100 of gold in 2010, you would have doubled your money today. Yay. But if you spent $100 in Bitcoin, well, you'd be sipping champagne or maybe some delicious Vichy Catalan if you're into sparkling water on a yacht right now, okay? Not to mention that several market makers like ARK Invest, Alliance Bernstein, famous people like Jack Dorsey, they're out there predicting $1 million valuation for one Bitcoin in the next 10 years. And I'm on board the $1 million Bitcoin train, just to be clear. I think we're going to $1 million as well. And if that does not convince you, then listen to the CEO of BlackRock, the largest asset manager in the world. Larry Fink said Bitcoin is an asset class that protects you. Larry Fink has become the chief media officer, the #1 Bitcoin shill, if you will. Thanks for watching.